Hello, and it's David here from Freedom Founders. I want to talk to you today about syndications. Syndications in real estate specifically. What are syndications? Well, syndications are a platform in which multiple investors pool their money and buy shares, typically in an LLC, limited liability company, and that limited liability company then invests in, purchases, acquires a real estate project like a multifamily apartment complex, could be self-storage, could be mobile home park, but usually something of a larger nature than a single-family house. Normally, you wouldn't syndicate a single-family house because it's a smaller investment. Usually, one person, one party, one investor is going to invest in a house, versus a larger project, multifamily, self-storage, mobile home park, for instance, commercial buildings, retail, medical office, whatever it is. That's where syndications oftentimes come to play because multiple investors can put in anywhere. Usually, it's a $25,000 minimum, $50,000, sometimes $100,000. Excuse me, $100,000 minimum investment. And most of the time in those syndications, the investor has to be accredited, which there's a definition. The Securities and Exchange Commission (SEC) has a definition of accredited, which means you have a certain amount of net worth or anticipated earnings of X dollars per year ongoing. To be specific, I believe it's still $1 million of net worth, excluding your primary residence, your home, or you have to, as a married filing together couple, if you're married, then $300,000 of gross income per year expected over the next several years, or if you're single, $200,000. Look it up, but that's accredited. That's kind of beside the point. The point is about syndications is it does create an opportunity to get involved in larger projects where you don't have to be the manager. There is a promoter, there's a sponsor of the syndication who has identified a specific, and this is key, specific project. It's 123 multifamily apartment complex in Memphis, Tennessee, for example, or ABC self-storage company project in Detroit, Michigan, whatever it may be. They've identified it. So it's not a blind pool where it's like, well, this pool is going to just invest in different things in real estate. We don't know what they are. Just put your money in and we'll figure it out. That's different. This is a syndication where a specific project's been identified. So good so far. I mean, I've been involved in syndications, and they can be a great way to invest. You can also invest your IRA money in syndications. It's hands off pretty much because you're not the manager, but you can get a lot of the same tax benefits of ownership because you actually own shares in the LLC, or your IRA owns shares, and you can get the tax benefits as well through a syndication. Syndications can leverage. Syndications can pool a certain amount of private equity capital and then go get a institutional bank loan, commercial loan, and leverage into that property. Again, enhances the results, does it not? So again, lots of positives there. I'm going to give you a caution, though, at this point, particularly where we are in the market today, because there's so much money because of the rise in real estate values. The stock market's gone up. There's been so much money that's been pumped into the economy by the Federal Reserves going back to 2008 and 9. Tons of money. The interest rates are still relatively low, even though they're starting to rise a little bit as the Fed's increasing rates. Still, the climate is very good. We would think the economy seems good. I'm not going to go into detail now, but there's a lot of issues with our economy. I believe a lot of it's pumped up on air, and therefore there's a lot of money looking for deals today. It's harder to find good real estate deals. It's harder to find really good deals anywhere because both Wall Street and the real estate markets are both high right now, and so it's hard to find those good deals. But money's still chasing those deals. So here's the point: there are a lot of people. In fact, I'd say the majority of people today that are promoting syndications don't have a history. They don't have a track record. They maybe have been doing investing of some sort over the last 2, 3, 4, 5 years. Really, since the markets came back and have really been an uprise. Well, look, folks, rising markets can make anybody look like a genius. Anybody can look like a genius in rising markets. I mean, it's almost like the great, you can do no wrong, right? Everything you touch turns to gold because the market's rising. You can make relatively average or even poor investment decisions, and the market will take that and ride it out. It's like the rising tide raises all shit, lifts all boats, right? Rising tide lifts all boats, even the poor ones, even the ones that are poorly made, poorly built, poor quality, will rise with the rising tide. Now, what happens is when that tide goes back out again, that is when we have a market reset. The economy does a major shift, a correction, if you will. Then, as that tide goes back out, the ones who aren't built of quality are the ones who will drop quickly. And you don't want to be a part of that. How do you know? How do you know who's who? Well, you got to know the person, the people, the manager, who's in charge of the sponsorship, the promotion, who's the promoter, who's managing this deal. If you don't know them and know them really, really well, I don't mean just from a presentation on a webinar. I don't mean from a presentation on stage. I don't mean from just reading the private placement memorandum documents that they'll send you on request. I mean, how do you know them? How do you really know what their track record is? I will only invest with other people, and this includes syndications, when I really know that person, and that means I've spent time with them, a lot of time. I've seen them around other people. I know what their character is, and I get to know what their real track record is. And if they haven't been down through the last major downturn in 2008, and they can't tell me some war stories about how they had to resolve issues because everybody that was in real estate back then had to resolve some issues. If they can't tell me those stories and I can't verify them, I'm not interested. There's so much money coming at these promoters. It's easy for them to raise money today. It's easy because everybody wants in. Everybody wants in now. Well, we're late in the game. We're late in the game right now. So my caution to you is there's very few really good syndications that are available anywhere out there today. Very few. There's a ton of them that you can invest in, but very few. And I'm very, very particular about how I invest. In Freedom Founders, I'm extremely cautious with my members and how I advise them about syndications today. A lot of people who are listening to this, who are promoters and syndicators, are probably a little upset with me. And that's okay. If you're good and you know what you're doing, then you shouldn't be upset. But for the most of you who are taking a lot of money in right now because you think you can do no wrong, it's going to come back to bite you, and not just bite you, it's going to bite your investors. And that may put you out of business, at least in your current model. They put you out of business. But the worst thing is for your investors, who may go down with the ship as well. It happened in 2008. It will happen again. So that's my caution to you in terms of syndications. Be very, very, very careful. Don't put your money in on stuff where just because people give you their assumptions on what this project's going to do, their pro forma, which means here's what the returns look like. They don't know. They don't know. And most of them are buying on such thin margins right now, or they're buying properties that they've got to do a tremendous amount of rehab to. What's their track record in doing that? If they're buying properties that have low occupancy rates, it's very difficult, even in this current market to bring the occupancy levels back up again. You got to be astute about knowing what kind of projects the syndicator is getting involved in. What's their track record in doing these? Not just one or two. What's their track record? How did they do back in 2008? What lessons have they learned since 2008, if they learned any at all, if they were even involved in 2008? Very, very important questions for you to be asking before you dump your money, invest your hard-earned money in any syndications of any kind. Okay, that's it for today. Just remember, always stay focused on your freedom, and you'll make it there sooner than later.